So far what we wanted to cover during our time here today was which times are the most and least volatile for the different pairs. I hope you're starting to see a rhythm, okay? What are the prime trading hours? When I say prime, prime's going to relate back to what is important to you, low volatility or high volatility. You might prefer the Asian session because of its typically quiet nature and lower volatility, or you might prefer that U.S. Open. But prime has more to do with what you prefer, not when the market's most volatile. We're not chasing volatility here. We're actually learning how to use volatility in terms of whether we like it or not. And again, don't assume volatility is upside, is profit. Volatility is risk to me. Okay? Volatility is risk. If you don't like volatility, you don't like risk. And there's nothing wrong with that. If I had to measure myself on this kind of timeline of trigger happy to gun shy, I'd probably find myself more on the gun shy side of things. I'm not a trigger happy trader. I don't necessarily like a lot of volatility. Okay? I've learned how to manage it, but I typically don't like it. That's just not the way I'm wired. And I'm not going to change myself. I don't see that my tolerance for things are going to change. And I'll even tell you, my tolerance for risk has changed as I've grown older. When I was younger, I was willing to take on a whole lot more risk in life and in trading. I liked bungee jumping, and I liked bungee jumping in my trading too. And now I'm, motorcycle and all that kind of stuff. That was the reflection of where I was in my life. Definitely found its way into the way I traded. Okay, so it's kind of interesting. You're not always going to be that same person. That's been my experience. So the prime trading hours are prime for you. Which market overlaps are the most and least volatile? We've talked about. The Asian overlap has very little volatility. The overlap between Frankfurt, London, and New York, especially between the hours of 8 and about 11 a.m., 8 and 10 a.m., very volatile. Okay? So then we have to put all that together, and we choose pairs and times that best reflect or best are most appropriate for your risk tolerance. That's how you use all this information. Okay? Let's take a look at the cable here, the British pound US dollar. Very different looking than the Euro US dollar, is it not? The cable is a more volatile pair in terms of pip movement, no doubt. Take a look at the Euro US dollar one more time. Okay. Take a look at the high to low range, the rhythm. Okay. Let's look at that for a moment. And here's the cable. Very different rhythm, is it not? So when I look at the rhythm of the cable and the volatility, remember the high range was 55 in the Euro US dollar, 75 on the British pound US dollar. Is Asia quiet during the, is the British pound US dollar quiet during the Asian session? Yeah, it is. We've seen that similarity on the Aussie, on the Euro US dollar, and now here on the cable. I think what distinguishes the cable from the Euro US dollar, this is again something you need to think about. If you like trading the cable, should you get up at 2 or 3 a.m.? Probably. So remember I said when these traders were telling me, oh, you're missing out if you're not getting up at 2 or 3 a.m. The part they neglected to tell me is they probably traded either the cable or pairs that traded against the pound sterling. Make sense? Not all symbols react this way at 2 and 3 a.m. Eastern Standard Time. The cable does, and probably pairs that trade against that pound sterling do. So if you are an avid British pound US dollar trader, is 2 a.m. to 3 a.m. an option, a valid time for you to possibly get up and trade if you like the volatility? Absolutely. Absolutely. That's something you could do. Okay? Again, but you're not just dictating it upon the financial centers opening. You're not just dictating it upon Frankfurt and London opening, but you're dictating it upon the reaction we get out of the pair when those financial centers open. So what happens about 2 a.m.? Frankfurt opens, we see a little pop. What happens at 3 a.m.? London opens, we see another pop. Who cares about the British pound US dollar? Europe and UK, right? Who cares, meaning who is concerned? Whose businesses require pound sterling? So obviously we see that there is movement during those 2 hours of the day. 4 a.m. we kind of come to a peak here as the Asian session begins to wind down and we end the overlap between Asia, Europe, and the UK. And we see the drop-off. So that rhythm of the drop-off after Asia leaves is still common to, is still, you know, we saw it on the Euro-US dollar. We're seeing it here on the cable as well. So 4 a.m. Asia closes, we see that drop-off. What is the cable waiting for? Well, when do we see that first little move higher? When do we see this first little move higher on this graph here? 8 a.m., right? So 8 a.m. is when the New York session overlaps with Frankfurt and with London. And we see the volatility. 8 a.m. is also the economic reports coming out of the U.S. Does it matter? Absolutely. This is the British pound U.S. dollar. When economic reports come out of, by the way, when economic reports come out of the UK, is this going to affect the British pound U.S. dollar? Absolutely. And when you look at your economic calendar, and I haven't mentioned it till now, but I should have, when you look at your economic calendar and you're trading, you know, these different pairs, the economic reports that come out of the country other than the U.S., you have to pay attention to because that could absolutely affect the pip movement. So if you look at your economic calendar and you see data coming out, usually sometime between 3 a.m. and 5 a.m. Eastern Standard Time, out of the UK and out of Europe, do you need to be aware of that? Could it affect the British pound US dollar? Absolutely. So make sure you're keeping an eye on the global economic calendar and you're just not fixated on the U.S. Now, if you're not up during those trading hours, I still think you should be aware of the kind of impact that economic data already had on the market. It will at least explain some of the wilder pip movement you might see as you're looking at a chart for the first time. All right? But be aware of it, and certainly if you're trading during these hours, you absolutely should be aware of it because that's going to be a reason for volatility to increase. So 8 a.m. starts to basically amp up this British pound US dollar, and we can see here going into 9 a.m., 10 a.m. What happens after 10? We really drop off. Why? Economic data, okay, is done. 11 a.m. is when what happens? Frankfurt's closing for the day. It's 5 p.m. in Frankfurt. Noon, it's 5 p.m. in London. What happens after 11 and 12 o'clock, especially after noon Eastern Standard Time? Boom. We hit the doldrums of the market. Most pairs that trade against the U.S. dollar will drop off dramatically after noon and stay very flat between noon and until Asia opens around 6, 7 p.m. I do not advocate, this is my opinion, I do not advocate entering new positions between noon and about 6 to 7 p.m. or when Sydney and Tokyo overlap. Not a big fan of trading the afternoon. Number one, again, it's about focusing on which hours a day are going to yield, I think, the kind of trades that are most appropriate for me. And also about when can I walk away. We don't want to be in front of the computer for 24 hours. Pick and choose your hours. Let this dictate how you organize your trading day. I'm not going to sit through this. If I want to sit through the doldrums, I could trade Asia. It makes a whole lot more sense. What happens after noon, by the way? Really important rule for me. It's called the 2 financial center overlap rule. If I don't have at least 2 major financial centers open at the same time, I'm not going to enter new trades. I'll manage trades any old hour of the day. If I'm in something and I'm managing it, I can manage that 24 hours a day. But entering new trades, there must be 2 major financial centers open. What are the major financial centers? Again, Sydney, Tokyo, Hong Kong, Singapore, Frankfurt, London, New York. After noon Eastern Standard Time, New York's the only market that's open until the Asian session starts up. So between noon and basically 6, 7 p.m., my 2 financial center rule that overlap, that rule is basically broken. Those are not valid trade entry hours for me.